What's up, everybody? Thank you so much for joining me for another video. Today, we're going to be introducing you to one of our key lending partners on the fix and flip side. Now, they do a lot more than just fix and flip. However, that is one of the areas where they really excel. So, the name of the lender, the name of the lender is Kiavi. So if you check out their website, it's Kiavi.com. Kiavi. Now, they used to have a different name in the past. I believe it was Lending Home in the past. But you're going to see when you go to their websites, this green this is what you're looking for. And they're going to advertise a few things. You got fix and flip, you got your DSCR rental loans, and then your portfolio loans. Now, the neat thing about Kiavi is their closing times. They close super quick. So what I want to do is I just want to jump right into the call, but just wanted to give you a quick intro on who you're going to be seeing today. All right, let's get into it. I want to introduce you guys to John Sickles. John Sickles is with Kiavi Funding, and I'll let John kind of take the reins here, have him tell us a little bit about himself, and we'll kind of get to learn a little bit more about what Kiavi has to offer, and hopefully add it to our database. So, John, go ahead.
Great. And if you, John, if you also want to let me screen share, then I'll pop in some slides and we can review all of that. But as you mentioned, John Sickles with Kiavi Funding. We used to be Lending Home. We changed our name back in, let's say, October of 2021, as there were a lot of companies in the industry with the word lending in their name, and we were getting associated with some lesser performers, and we decided to differentiate ourselves. So we became Kiavi Funding, but we have the same platform, the same technology, the same great products, and we're in a situation where we're just growing year over year. I want to go ahead and
you should have ability to share now.
Yes. So,
oh, look at that. Busy John there.
Yes. All right. So, can you see the full screen?
No, we can only see the slides separately.
Okay. All right. So, Kiavi Funding, we've been around since 2013. Our specialty is bridge and fix and flip lending, and we also do rental loans. We are probably the industry leader in bridge and fix and flip. Last year alone, we did, $4.4 billion in total fundings in 2022. Before I get into the metrics about the company, let me talk a little bit about myself. So I've been in the lending business for 25 years, probably a little over 25, but bordering on 27 years. I have a little bit about myself. I've done a little over $1.5 billion in individual fundings. Not to mention, I've managed teams of very large production teams at a few different banks and mortgage banks. I've played a lot of different roles in the lending industry. I started my career in retail lending, doing house loans for people who wanted to buy homes and second homes and investment properties, and branched out into doing commercial loans for about 15 years. So, I've been a president of a few mortgage banks. I've been a senior vice president of one of the nation's largest mortgage banks, privately owned banks. And I've played a lot of different roles in the business. And one thing that does for me is it's given me a tremendous amount of experience to be able to help the brokers I deal with now. So, my predominant side of the Kiavi Funding is I deal with mortgage brokers, specifically on helping them get onboarded into our platform, learning our technology, learning our products, submitting loans to us so we can close and fund them. I brokered loans with Kiavi for about 3 years before I joined them in the wholesale side of things. Some people have asked me, well, John, if you've done all those things, and you've had these high levels of responsibility, why are you doing what you're doing now? Honestly, management is not all it's cracked up to be. So I applaud those who want to continue doing it, but I felt like I was a glorified babysitter some days. And, more people you manage, the more headaches and the more problems. And I really enjoy what I do now. and I get to work with the brokers either on a company basis or one-on-one, and help them fund the deals that they really can't get funded anywhere else. One thing that's really important to understand is the industry has changed quite a bit in the last year and a half. With the residential lenders out there lending money at 2.75% to now almost 6.5%. That side of the business has dropped dramatically. So one of the things that we've found over the last 14 months is a big migration from those residential lenders looking for new product to fill the void because they went from very robust pipelines of 15 or 20 loans for a loan officer to barely having one or two loans to work on at a time. And so one of the things that happens is a lot of the loan officers and even the commercial loan officers that have been doing this for a while, there are still great opportunities in the fix and flip market. Mm-hmm. And, just a basic premise for those who may not really understand fix and flip. Really, all we're doing is we're creating an opportunity for a flipper or a contractor or an individual property investor who wants to go out and buy a property that they see some promise in, renovate it, increase its value, and then resell it for a profit or refinance it into a long-term hold and keep it as a portfolio rental property. Okay. So that's really what we're doing. So, if you can see the slide that I have up right now, we financed over 39,000 properties and $10.1 billion over our career since 2013. In just last year alone, we've seen a tremendous growth year over year. And so last year we funded $4.4 billion, which was almost 16,000 loans. And out of that 4.4 billion, probably about 3.8 billion was bridge and fix and flip, and the rest of it was long-term rental loans. The company has recently made a big push towards long-term rental loans. We've reduced our rates dramatically. We are very competitive in all of our products. But one of the key features of Kiavi is our technology platform. Mm-hmm. So based out of San Francisco, we're really a technology company that lends money. Kind of like McDonald's is a real estate company that makes hamburgers and sells hamburgers. Okay. So our technology is unrivaled. Our speed is unrivaled when it comes to application to funding on all of our products. And I'll talk about that in just a minute. But what you're looking at right now is just a slide that summarizes the product offerings. So we do bridge and fix and flip loans. Basically, a bridge loan is just the acquisition or refinance of a property that has no renovation associated with it. We're keeping it for a short term. Could be various reasons why someone's using this product. They went to another lender and maybe that lender, strung them along for a month. And all of a sudden a problem popped up and now they only have 10 days to 2 weeks to close on the contract before they lose their deposit. So They come to us and we do a quick bridge loan. Or they've got a property that's maybe leasable. They don't want to enter into a situation where they're going to have a prepayment penalty. So they take the short-term bridge because they think they're going to sell it in 2 years. And that's another option. And then obviously our fix and flip loans are specifically for properties that are going to be renovated and either resold in the future or converted into a long-term rental. You'll see down here, you'll see some numbers as far as the LTVs and LTCs. So on our bridge and our fix and flip product, we will actually offer this to someone who has zero experience in the bridge and fix and flip space. Not a lot of lenders will do that, but we do. So whether you've got 0 to 4 flips, we will still lend you 85% of the purchase price, 100% of the renovation, and we'll lend you up to 70% of the after repair value. Now, for those experienced flippers and contractors who've got 5 or more, property flips or exits under their belt in the last 2 years, purchase price, 100% of the renovation, but we're going to limit that to 75% of the after repair value. So those are pretty aggressive numbers. Rates are going to vary, and every loan is priced independently. But if I had to give you a range of rates, we're probably between 9 and 11% on our average rate. With these very high leverages. Okay.
And John, if you wouldn't mind just telling us today, what day is it that we're quoting those rates? Because we all know the rates change on sometimes a month, weekly, monthly.
Oh, absolutely. Yeah, absolutely. So,
today,
so today is April the 24th, okay, of 2023. like you said, John, rates will go up, rates will go down. The bridge and fix and flip rates stay pretty consistent within that range for the most part. We've seen some credit policy changes in the last year, just like everybody else, but ours have not been as extreme. Kiavi's philosophy is we plan on being around for the next 10 years, not the next 10 months. Okay. So we've seen a lot of competitors recently that have cut back their leverage significantly or gone out of business or stopped lending for durations of time. That hasn't happened to Kiavi. We are a sound company. We securitize all of our bridge and fix and flip paper, so we have a secure ongoing source of revenue to be able to lend from, and we're one of the industry leaders. But again, our technology drives a lot of that. We have the analytics behind every loan that we've ever done. So, we can see trends before our competitors do because we have so much data that we pull from. The other product offering is going to be the single asset rental loan. And, in that space, really that's a single asset rental is just somebody wants to buy or refinance an existing rental loan and they're keeping it for long-term rental. We'll offer 5/1 arms, 7/1 arms, 30-year fixed. We offer interest-only options. This is a debt service product, so we're not looking at any personal income. We're not looking at any assets. It's strictly the property, the guarantor's credit score, and then the property's value, and a debt service calculation. And we're coming up with a loan amount and an interest rate from that. What's unique about us is on the single asset refinances, we get asked a lot, what's your seasoning period for a refinance, to do a cash out or to use the appraised value from purchase. So when somebody does not use a Kiavi loan, like on a bridge or a fix and flip, we have a 180-day seasoning period for, using the appraised value or, calculating cash out on a refinance. If someone comes to us and does a bridge or a fix and flip with us on the front end and then converts it to a long-term rental, our seasoning period is only 90 days to then use the new appraised value and to even do cash out. So we kind of incentivize people to use our bridge money and our fix and flip money if they want to transition into keeping that property as a long-term hold. We also offer a rental portfolio program, and this is relatively new for us. It's past the incubator stages. We've closed quite a few portfolio loans now. And what I'll emphasize to anybody is for any of the products that we have here, you're going to want to reach out to me directly so we can have a conversation. I can provide you with detailed information. If I did a full-blown presentation today, John, as you and I talked about, we'd be on this call for about an hour and a half, and I don't think anybody wants to listen to me talk that long. So, but yeah, rental portfolios are another product that we are doing very well with. And the one thing about Kiavi is we test and prove everything before we release it to the public because we want the experience from our broker clients to be the best it can be. And, I worked for a previous company who would get an idea, they'd put together a product and they'd go launch it, and it was awful. And then they worked out the kinks with the brokers, and that's not the way to do it. So Kiavi is very good about launching a product after it's been tested and proven and all the kinks have been worked out. So it's pretty much a smooth, effortless transaction where everybody enjoys the process.
Right.
So, we covered the bridge and fix and flip loans, long-term rental loans. The next thing would be, how do we get started? And, what I want to do is I'm just going to throw up a couple of bullet points on the bridge and the fix and flip loans. So as we talked about earlier, on the screen right now, 90% for a pro borrower who's done 5 or more flips, 85% for a standard borrower who's done 0 to 4 flips. Okay. We always finance 100% of the renovation, and, we'll go up to 75% of the ARV for a pro and 70% for a standard borrower. Our minimum loans, 75,000 up to $1 million on a flip. Now in California, high valued areas, we will go to $1.5 million for a pro borrower on some fix and flip product in like the 15 high value counties in California. Otherwise, just assume we're going to be limited to $1 million. We don't want to be one of those lenders who's doing $2 and $3 million flips. There's just too much risk associated with that. Too many things can go wrong. And again, we have the metrics to prove all that. So we know. Our minimum credit scores is 660 on all of our products. And on the bridge and fix and flip, we offer a 12-month, an 18-month, and a 24-month interest-only term. We try to, obviously it's the borrower's selection on how long of a term they want, but we'll usually tell someone if they're doing an extensive renovation on a flip, $150,000 in renovations, are you really going to be able to get that done in 12 months? You're better off to take a slightly higher rate for a slightly higher rate for the duration and extend it 6 months rather than at the end of 12 months, you have to do an extension that's going to cost you more money. Okay. But we have those options available. A little bit more about the bridge and the fix and flip. So we do our own valuation on bridge and fix and flip. So this is why we can close a bridge or a fix and flip loan in less than 2 weeks, because we do our own property valuations. We don't do third-party market appraisals. So from a scope of work, we do a property inspection for pictures, but we don't do appraisals. Okay, we have our own valuation department that's all they do is property valuations all day long. We lend on single family, 2 to 4 family PUDs and condos. We can close in as little as 10 days, but the average is roughly around 2 weeks. We do charge a 1% origination fee or $1,500, which is ever greater. Plus, we have a service fee that covers, property inspection, closing documents, flood certs, and all the other ancillary reports we have to do for every property that we fund a loan on. And our brokers can earn up to 5% total on a bridge and a fix and flip loan. And again, I can talk more in depth individually with people who have interest, at that time. And the interest is only on money drawn. So, there are some lenders out there still charging interest on the whole loan amount, even though they might not have advanced the $80,000 for the renovations yet. So our interest is only calculated on money as drawn down. And one important thing too is we only lend to entities at Kiavi. So we don't lend to individuals anymore. We did in the past, but we determined that in all of the fraud that we saw on our loans, it was primarily focused around individual borrowers. So, about a year ago, we made the policy change to only lend to entities. And whether there's 2 members or 4 members, doesn't matter to us. As long as our guarantor has at least 25% ownership in that entity, we're good to go. And again, more details can be discussed about that later. So I want to move on real quick to the rental product. So long-term rental, I'm just going to throw up some highlights real quick. We'll do purchase, rate and term, or cash out. We'll lend up to 75% on a purchase or a rate and term, depending upon credit score. And again, credit score minimum is a 660. And, we'll go as low as a 0.8 debt service. Usually when the debt service goes lower, the LTV goes lower as well to compensate, because it's a little bit more of a risk. So, debt services for us are going to be anywhere from 0.8 to 1.1 is our range. And our minimum loan amount is going to be $75,000. Max cash out on any particular loan is going to be $500,000. And our loan amount ranges are going to be from $75,000 minimum to $2 million max. And I'll just emphasize the fact that we don't make exceptions on loan amounts. What the limit is the limit. We don't make any exceptions on those. In the rental space, we do lend on single families, 2 to 4 families, PUDs, and condos as well. And I mentioned earlier, we have a variety of products that can be selected from a 5/1 ARM to a 30-year fixed to interest-only options. Currently, we charge a 0.375% origination fee or $1,500, which is ever greater. We instituted an origination fee in the last 4 months because the volatility in the market demanded that, everybody raise their rates and the cost of capital was shrinking. So we threw in an origination fee to keep our rates under control and to keep them very competitive. And I think people will see when they compare us to others, we're extremely competitive on all of our products when it comes to rates and terms for their borrowers. Our brokers can earn up to 3% max compensation on a rental loan, as opposed to 5% on a bridge and fix and flip. We do sell off these loans, so we have a little less control than we do on the bridge and fix and flip, since we securitize all that paper. And all of our rental loans come currently with a 3-year prepayment penalty, so it's a 3-2-1 declining. And We have options coming soon to allow buy downs or buyouts or reductions in the prepayment penalties. Those are expected to be released in the next 30 to 60 days. And like our bridge and fix and flip, we lend to entities only. So whether it's a LLC, a partnership, a corp, or a revocable trust, we're open to all of those. As I mentioned earlier, one of the things that makes us very special is our technology platform. So from pricing all the way to funding, we are, everything is done within our portal. It's very easy to price a loan with us and move it in, transition it into application, into processing, into underwriting, and into funding. So everything's done in one seamless piece of technology, very user friendly. I get rave reviews and compliments on its simplicity and easy to use technology base. So most people, they can close a lot faster with us because it's all done on very efficient technology. That has a lot to do with our performance. I'll just leave you with a quote. Those who let things happen usually lose to those who make things happen. Okay. So today is the time to make things happen. So for all those brokers out there who want to get started, give me a call or send me an email. I can get you more detailed program information. I can get you hooked up in our portal so you can start quoting some loans. I can run through scenarios with you. I mean, that's my job. That's what I do. So, John, you can see the contact information on the screen, right?
I can. Everybody
Okay.
screenshot this, please. Write it down, whatever you can do to get in touch with John. John's been doing this for quite some time. And the
Yes.
last thing you want when you're hooking up with a lender is to get a newbie AE. You don't want an account executive that's still learning the guidelines. Super important. So that's why we vetted our account executives to make sure they know what they're doing and they're supporting our people in the right ways. John, thank you so much.
You are welcome. Thank you for the opportunity, John. And I welcome all calls or emails from anybody who has any interest. And we'll get started once they're ready to move forward.
Yep. Hey, I got a few questions for you before we drop off. Do you mind?
Okay. Absolutely.
First question. Do brokers require any experience when they want to join up with Kiavi?
No, they don't require an experience. Really all they need with us is they need an entity. Okay, because we're gonna approve their entity. And we lend currently in 32 states plus Washington, D.C. So we're not in all 50 states. Mm-hmm. There's probably only a handful of those states that require actual licensing, such as like California, Arizona, New York, New Jersey, and a few other states. But there are a lot of states that we lend in that don't require any individual licensing in that state. So, right. Florida, Texas, Georgia, Alabama, Tennessee, there's a lot of states that just don't require any licensing. So, they come to us, they have an entity, we go through the broker approval process, they fill out an application. We do a background check for criminal backgrounds, looking for felonies, especially financial crimes. But other than that, it's very simple to get approved with us. Mm-hmm. And once they're approved, they don't have to have any experience. Obviously more experience makes them more efficient at being able to talk to consumers and to actually broker loans. But I do a lot of training with relatively new loan officers into the industry. Mm-hmm. So it's not a prerequisite in order to work with us.
That's wonderful. That's wonderful. Now, how quickly can you close on a fix and flip that you were mentioning earlier? I didn't hear that part.
Our average is about 2 weeks. Okay. And when I say average, that's a lot of lesser experienced brokers that maybe extend that average out. But I've got some brokers and some borrowers that are repeat clients that, we can close a fix and flip in 10 days.
Mm-hmm. Do you require an appraisal on those fix and flips?
On fix and flip, no. We do our own valuation on the fix and flip. Okay. So we do require a property inspection for pictures because we have to see the condition of the property. And then obviously there'll be a scope of work for the work that's going to be done. And then our valuation team will take those pictures and the scope of work, and they'll come up with an after repair value, which is all we're shooting for on our fix and flip.
That's killer. I want everybody to just note that that's a big deal. Most lenders require an appraisal, which slows the entire process down depending on how busy appraisers are in that area. So when you hear there's no appraisal needed on a fix and flip, this is like one of the biggest selling points for fix and flippers.
Which is why which is why we can close so fast, because we're not
Exactly.
waiting on that third party market appraisal. And even appraisers who don't do a lot of fix and flip appraisals can create problems with their appraisals.
Oh
Okay.
yeah.
And our valuation team, this is all they do, 5 days a week, 10 hours a day, is just look at scope of works, property inspections, and do valuations. That's all they do.
That's amazing. How about you guys? You mentioned you were wholesale earlier. Do you guys have any white labeling or table funding programs?
We don't do any table funding, but I will tell you that when a broker signs up with us, every one of our documents is white labeled until it gets to the closing. Okay.
Okay.
So the only time a borrower is going to know that Kiavi is involved is when they're signing their closing documents. And
Got it.
another thing to emphasize here is we have a broker protection program. So if a client comes to us and, or if a broker brings a client, we close and we fund that loan, and then later that borrower shows up either through another broker or one of our direct team, I get like 3 different alerts that let me know this is a former client. It was one of XYZ broker's clients. Please redirect the borrower back to them so they can have a communication about doing this new loan. So we track, I told you we were a technology company, so we track all these metrics. So if after a closing or a funding takes place, even after an application takes place from a broker, if we get another application in the system and it's got the same name, phone number, email address, home address, it's going to throw up an alert in my system, and that client is going to be rerouted back to that broker that we did the loan with previously.
That's wonderful. I've never actually heard of earning yield spread on a fix and flip loan.
Yes, we do. Now, what I always tell our brokers on yield spread is it's important that you don't bank on that yield spread for your operational money, okay?
Right.
Because we are going to collect that. So basically, the idea behind yield spread is you're going to increase the rate, which is going to allow Kiavi to make a little bit higher spread on those payments, and we're going to collect that over time. So we only pay the yield spread out after the loan pays us off. Okay. So what typically happens on a fix and flip is the broker will charge their operational money in points at closing on the settlement statement. So I'm going to charge 2% now on my $400,000 loan, and I'm going to make that money when we close. And then maybe I've priced a 1% yield spread into that loan, which would be $4,000. And that's based upon us holding that loan for 12 months, which is our base period. But let's say that loan pays us off in 6 months. Well, we would have only earned half of that spread because they only kept it for 6 months. So what will happen is we'll pay a pro rata out to the broker of yield spread based upon a $4,000 yield spread for a year. They pay us off in 6 months. We're going to pay them $2,000 the month after the loan pays us off.
Okay. So they
So,
get
so
their
I
yield spread once the borrower refinances or sells the property, right?
correct the
Once
month
they
after.
pay it
Yeah.
off.
Yeah. So I
Yeah.
say, charge your points up front, and that's where you make your money, and treat the yield spread kind of like a bonus,
Yep.
because more likely, 6, 7 months down the road, you're going to forget that you had yield spread until you get a check or a wire from us.
That's wonderful. Question on sourcing your funds. On a fix and flip, or maybe it's different with a rental, do you have a requirement on source of funds or seasoning on source of funds for
We do
down
not.
payment?
We are very unique in that respect. So we don't collect any bank statements or look at any asset statements. Okay.
So someone could technically cash out their credit cards to put it in their bank account and then have enough money for a down payment, possibly, as long as it doesn't mess their credit up.
I won't confirm or deny that.
Okay,
Here's what
okay.
I will tell you. So the only thing we require is that at closing, that if there's money being brought to closing, let's say it's a purchase scenario and they have to bring their down payment plus loan costs and whatnot, that the title company confirms with us where that money came from, where it was wired from into the title company. Okay.
Mm-hmm.
And we will only accept monies from the entity that we're lending to, or individual members of that entity that own at least 25% of that entity, one of their personal accounts.
Got it.
How the money got into those accounts, we don't know. We don't track, we don't source, we don't season. Okay.
Okay.
So we only require title report to us how the money got to them, at
Doesn't
closing, and
matter.
where it came from. Yes.
Wonderful, wonderful. I love that aspect because a lot of our guys have creative financing solutions. So, they'll do a loan to help finance or whatever. So that's wonderful. Is there anything we should know that we haven't already asked before we kind of close out here, Mr. John?
I've tried to be as thorough as possible, and obviously the one-on-one conversations will have a lot more time to expand on details. But no, I just emphasizing the fact that Kiavi does a high volume for a reason. It's not by accident; it's by design. We've designed our technology, our processes to work with brokers to be highly efficient and to get to the closing table as fast as possible.
Wonderful.
And we didn't do $4.4 billion in last year, like I said, by accident. I mean, that's a pretty big number for the bridge and fix and flip space. Okay.
Right.
And it's because we've designed a process that works. And as long as the brokers work with us on the way we've set it up, they're going to get outstanding performance.
Right, right. No, absolutely. And I totally agree, John. What that $4.4 million or billion, excuse me, billion
Billion,
dollars
yes.
is saying in 1 year is saying that there is a market where you could build your entire business around just Kiavi's product and fund. There's plenty of business out there and have a fully funding brokerage just doing that. You could do 100 million plus. There's plenty of business available is what that's saying. They created a product and there's plenty of business out there where they're closing enough loan. 4.4 billion. What's your average loan size? 300,000?
I think it's more like 279,
That's
280,
so
somewhere in
small.
there.
So imagine
Yes,
how many borrowers are out there using Kiavi's money. And like you said, you can white label the loan from start almost to finish. So they wouldn't have any incentive to go around you because they only see you throughout most of the process. So
correct.
that's a big deal. I would definitely consider building my business around Kiavi as and just your primary product. There are other ones, obviously, but when it comes to fix and flip, you guys are a great option. I love everything I've heard.
Well, and let me just add to that the transitional loan from a bridge and fix and flip into one of our Kiavi DSCR long-term rental loans, that allows a broker to get paid twice. We already have knowledge of the client. We already know the property. That's why we
Right.
give them a 90-day seasoning period for, refinancing. And so for those investors that are basically fixing and flipping to build their rental portfolio, that's
Mhm.
another avenue that just enhances that relationship with the client.
Oh yeah, the Burr strategy:
Yes.
buy, rehab, rent, refinance, and
Yep.
that could all be done in-house with this one lender.
Yep. You got it.
Beautiful. All right, John, I think that's all I got for you, brother.
Okay. Thank you so much, John.
Absolutely. Thank you. And we'll see you next time.
All right.
Take care.
Bye bye.
All right, guys, you guys heard it from the horse's mouth, exactly what Kiavi's looking for and exactly how you can partner with them. So remember to go back in the video where you saw John's information. I will be posting it in the description so you know how to get a hold of him. But the next thing you should be doing is calling John, getting set up with Kiavi so you can start advertising his products. Thank you so much, guys. We'll see you in the next event.